What's up, y'all? Happy Thursday. How y'all making out? It's gonna be a good episode. We're gonna help y'all get this money so y'all can start buying y'all properties, buy them, rent them out, flip them, whatever you want to do. Got a great interview with iFund Philly with one of the partners, Ryan. So we're looking forward to this one. Waiting for him to jump in. It's coming, good brother. The mentorship is coming. We actually give us about, give us a couple weeks. It's actually in motion, but we could talk offline. Definitely just reach out to me and let's try to figure out how we could fix the gaps for you. Make sure y'all let me know whatever questions y'all have, whatever y'all trying to find out. Make sure y'all let me know so this way we can make sure we ask Ryan. Got Legend's dad in here. I see you, big homie. I see you, Tim. Got the big homie Mir in there. I see you. Hey, Mir, we got one of the top lenders in Philly getting ready to tune in. Got the big homie. What's going on? I see y'all. I see y'all. Make sure y'all share this with somebody. Somebody y'all think that this will help. Share it with one person. What's going on? How you? How you? Hey, Salima. Long time no see. Hope all is well. Man, don't be playing. You talk about getting a mentor, man. You already got the dream team and the blueprint, man. I'm trying to keep up. Wait for our guy Ryan. He should be getting in here any minute. Should be getting in here. Nah, you getting ready to list that nice flip, man. I know that thing gonna go the first day. We need to get with you. Definitely looking forward to seeing that thing hit the market. But I'm definitely excited. I know one of the hardest things for me in the beginning. I have a question. Do you end the contract with the agent if you're a potential buyer? If you're a potential, yes, you can end the contract with the agent. I would just say make sure that you send the email and put it in writing to acknowledge that you no longer want to work with that agent, and let your new agent know you were previously working with that agent, so they can just make sure they clear the lines. But yes, you can end a contract with the agent. But I was saying, one of the hardest things first starting out is getting the funding. So being able, there we go, Ryan. I'm getting ready to bring you in. Yes, you can get out of the contract. That's not a problem. Where you at? iFund Philly, where you at, Ryan? I can't. You still in here? Ryan, you just was in here. Where you at? Well, even if you don't come to me, still reach out just so I can, all right, I see you. Just so I can help you out. Just got him on here.
There we go. I got to turn this camera around though so y'all can see me. There we go. My camera's broke. We live?
Here we go.
You got me?
You got it, man. Your first live.
That's right, man. Let's go. What's the word?
Ryan, glad to have you, Ryan.
Came correct like you told me. I'm on line. We ready?
Nah, man. How was your day, man? How you making out?
We're good, man. We're good. We're down here at the shore, hanging out, trying to make a living, ready for the world to open back up. Everybody to be
Okay.
happy. Peace, love.
Right. Definitely appreciate that, man. Well, we're glad to have you. But for the people that don't know, just introduce yourself. Let them know who you are and about your company.
Sure. Yeah. So we're iFund Philly in Philadelphia. Outside of Philadelphia, we're iFund Cities. We're a private lender. There's 4 guys on our team. So private lender, I guess, to explain to everybody, we sit between hard money and local bank money. So we're a little bit less expensive than hard money, a little bit more expensive than bank money, and then greater leverage than bank money. There's 4 amigos. There's myself and Chris, who spent the majority of our careers on the real estate development side. And then there's Justin and Brian, who have spent the majority of their time on what I'll call capital markets. So raising capital, structuring equity, structuring debt, selling loans to Wall Street. So it's a little bit about our firm. We service, Ohio to Georgia. We're primarily a residential lender, 1 to 4 units. We lend to LLCs and corporations only. And, man, we're one of the only guys left in the business that during, the crisis continued to fund and help investors, navigate, fund their draws, continue their construction, and, do more deals. So we're thankful to be here tonight, man, and we're excited to meet everybody and answer any questions that we can.
Definitely. Well, I'm glad you guys are still pushing, man, because this COVID thing definitely was a scare. A lot of people didn't know what was going to be what, but it now seems to be that, real estate is pumping again.
Yeah, man.
Let's get it. Promising. So we got to ride it as long as we can ride it. But for you said you started out in development. So can you touch on that?
Yeah. So I bought my first house, 341 Dickinson Street in 2008. Borrowed some hard money, raised some equity. Didn't make a lot of money, but it was my first house. I kept it. I still have it to this day.
Okay.
And then we just kept growing the portfolio. So we've done everything from your single family rental to your 44 unit new construction. On Frankfurt Avenue, we built 44 units. We've done a bunch of single family houses, duplexes, triplexes, and we don't do as much development anymore because we don't want to compete with our borrowers. But we definitely bring some of the landmines that we stepped in along the way on zoning issues and things to be concerned about with framing and your MEPs and just how to work with GCs, how to properly plan for for projects and yeah, that's how we started, and then we navigated into lending.
So you started out with the basic one property, but you've grown just learning through the ropes. You set up the 44 unit development project.
Mm-hmm. Yep.
Here in Philadelphia.
Yep. Yeah, we built 2006 through 2020 Frankfurt Avenue. So if you know that area, it's the Frankfurtian 6 units and the commercial space. Then we did Frankfurt Stacks, which was roughly about 17 units and 4 commercial spaces. Then we did 4 triplexes on the back, and then 10 single family homes in and around that same area.
Man, that's amazing. So I know a lot of people talk about, oh, I want to be where you are. So like, how does that work for somebody who's just starting out, like that very first property, to even trying to get to that level? And I think the thing is too, people forget their steps. So like I've heard you say, hey, I started out with one regular house and I've done a duplex, triplex, and worked my way up kind of thing. And then now you even have partners to kind of take some of the leverage off your back.
Yep, that's true. So we first of all we're tiny in the scheme of things. We're big in the lending space. I would say we're tiny developers, and at the end of the day, we got our ass kicked on that 44 unit deal. We got caught in zoning for a year and a half for height variance and some density things that we thought we would get done. And it was a big learning curve for us, dude. So it cost us investors. It cost us a lot of time. We ended up making money despite ourselves. And so that was the biggest project we've taken on. And then we went backwards, and started doing smaller multifamily because it was more in our niche, more of what we understood. But I'd say if I was starting out, the first thing I'd do is I'd find a mentor. I'd find either a bank or a lending partner. I'd find a development partner. I'd find a mentor within real estate with a lot of experience and ask them to either guide me or coach me through the business. I'd build a Rolodex of good advisors around me, that being, good architect, a good attorney, a trustworthy GC, a reliable lender. I'd build that infrastructure, and I would go look at a lot of projects and do my homework. I would really do my homework. I'd get on the MLS. I'd look at Zillow. I'd look at Redfin. I'd understand the zoning, through the city, and just make sure you're getting yourself into a project that can make sense. I can't tell you how many times we see deals that are being sold by whoever, and it's just a function of the market. But what was bought at 80 is now being bought at 125. But on top of that, your building costs have exponentially gone up, and so your margins are getting thinner and thinner and thinner. And so the margin of mistake with a project, with change orders, delays in timelines, delays in zoning, those are all big missteps that can cost you, a project today. Whereas when I started in 2008, you had a little bit more wiggle room. I got the opportunity to make a lot more mistakes, and it didn't totally destroy my project. So I'd build a good team around me of experts in their space, and don't be so concerned that you make $100,000 on the first one. If you make anything on the first one, that's a great deal. And slowly hit your singles and your doubles and your triples and work your way up, and you'll get there, and money will flow.
Now, so you just dropped a lot of gems right there. So I'm trying to write them down to make sure I catch them all. But
I'm fast. You speaking fast. I'm sorry.
It's all right, man. But it was really good, and I think people struggle with that part of, before you went and looked at houses, before you go and say, "Oh, I'm gonna buy 3 houses and flip them," you said no. Pump the brakes. Get a mentor, somebody with experience and that has actually done more than one deal and just woke up and been on Instagram saying, "Oh, I'm a real estate mogul." No, find somebody that's a mentor, and then find people in the different trades of the sales, of the construction, of the the building and development, whatever niche you're trying to be in, and then just network with them.
100%. So Gary Jonas, if you guys know How Properties, I'd call him a big developer in Philadelphia. Gary and I drove around and walked around these streets of Philadelphia for, I don't know, months, 6 months to a year. And I just picked his brain, on how he did these big deals, how did he structure them, how did he think about debt and equity, what were the landmines that when he started out. And, he helped me through my first deal. He helped me build my first construction budget. And the other day, he was instrumental in kind of getting us to the next level. Him, Jeff Tubbs, and Bob Shaw, those are the 3, and Jim Moransky. All 4 of those guys took me under my wing, and I bought them a lot of beers, and I picked their brain, and I was annoying, dude. I always say there's that great white shark, and that was that little shark biting on their dorsal fin, trying to get a piece and learn. And I think you just got to be hungry and humble, and don't be scared to ask for help.
Okay. And as the new person, I guess, what does that look like to make a mentor want to help you, kind of thing? Like, how, because people are saying, "Man, I can't find a mentor. I can't do it." Like, what's that look like to make them, qualify, or make them be able to say, "Hey, like, how can I entice somebody to be my mentor?"
Yeah, I don't know if there's a good bullet for that, man. I think if you're genuinely interested and you're talking to these guys, I think guys that have made it are naturally what they want to do, what makes them feel good after they've checked all their monetary boxes is give it back. And so I think if you're genuinely interested, and that doesn't mean I'm going to call you for coffee one time and never talk to you. It means I'm going to be consistently, bugging you, calling you, setting up meetings, asking you questions. I think naturally there's a lot of guys in real estate that want to help young guys, in Philadelphia. Mike, if you're doing bigger development, Mike Stom's at Stom Development does a fantastic job of mentoring young guys. There's a lot of guys in the BIA I'd suggest you guys plug into. I mean, there's a lot of wealth and wisdom in there.
You said the BIA?
The BIA.
You said the BIA? What's the BIA?
The BIA is it's the BIA Real Estate Association. It's just the Philadelphia Real Estate Association. I don't even know if it's paid, to be quite honest with you, but Jim Moransky is the president. He's an outgoing, good guy, and all those guys in there, They do a lot of seminars, workshops where you get kind of the best minds in Philadelphia to learn from. And those are great areas to go up, shake somebody's hand, introduce yourself, say, hey, I'm XYZ. I'm really looking to do my first project. Here's what I've done thus far. Can I grab you? Can I buy you coffee? Could you share a little insight of how you got started and start cultivating those relationships?
Okay. I like that. And that's kind of how I got started. But I was in Dig, Dig Philadelphia.
Yep.
Yeah. So when I was doing this in college, going to the Dig events, and that's how I got connected with guys like Bill Kratz, Steve Seymour, and a couple of the other guys. And like you said, they've been super instrumental in getting me moving and started. So I definitely agree with that. So if we can we dive into the finance part of your company?
Yeah.
What are your current rates right now? Let's talk about that.
Yeah. So let's talk pre-COVID and post-COVID so everybody kind of understands what happened. So pre-COVID, lots of liquidity in the market. Banks were rushing to give people money. Private lenders were giving people money. Hard money was coming down in rates. Wall Street was table funding. That means if you were a broker and you were a good marketer, they would put money behind you and you could close in XYZ LLC, and provide working capital to real estate investors. COVID comes, rates were somewhere between 8.5 and 10.5, on the private side. And that was dictated by three things: your FICO score, your experience as an investor, and the project, most importantly. Did the project make money for both the investor and cover the lender's costs? Do you have good credit? Have you proven track record of paying your bills consistently? That's the least one. And then, have you proven to manage a project, with your real estate experience? So those are the three things. Post-COVID, Wall Street disappears, credit market sees overnight. If you watch the news, you see this. REITs took a shit. Wall Street pulls out. Local banks get, buttholes get really tight because their commercial lending's, on the shitter because small business gets killed. And so most lenders disappear. The brokers disappear altogether. The Finance of Americas pull out of the world. They'll pull out. Lima One pulls out. They're all funded by Wall Street. That leaves you with two buckets of money. That leaves you with, if you got great banking relationships and you got a lot of business, they're going to take care of you because they don't want you to default. You have guys like us who have a big balance sheet that, we can put the loans on our balance sheet and service them. And so we don't have to sell them to Wall Street. So we're still in business. And then you got hard money guys, who have expensive money but are reliable. And so, post-COVID rates are somewhere in the, 9.75 to 12, 2 to 4 points. We kept leverage pretty good. We're up to 65% of the after rehab value, or the lesser of 90% of loan to cost. Those are still really good leverage. Those are kind of pre-COVID leverage rates. So we kept our leverage the same, and rates ticked up, let's call it 200 basis points. So not a drastic difference, but a slight difference, for people. Hard money somewhere in the 12 to 14, 3 to 4 points.
So for people just starting out, are you guys still taking on new investors looking to be funded, or are you guys not doing new investors right now?
So we are doing new investors, but we would have to control the GC. Meaning we would dictate a handful of guys that we use. We use PBDC and Grit Construction for new construction. We use Full Court Development, Aaron and Brian Cohen, and Mike Tracy for our.
I know the Cohens. Yeah, I know those.
Yeah, for rehabs.
They're doing some killer rehabs.
Yep. So we would direct you to one of those four. Go ahead, Dan. Sorry.
Okay, so if I'm hearing you right, I could come to you for funding, and you would provide the contractor for the rehab.
Correct.
That would be the stipulation for the first deal, or the first and the second?
For the first deal. But I think normally when we recommend those guys, no one leaves them. But yes, for the first deal, first of all, I think there's a couple reasons for that. One, those are great guys who like mentoring, so you're going to learn a lot. Two, they're reliable, they're on time, and they're fair. And three, they're long-term partners of ours, meaning they're already borrowing partners for us. We've done a lot of deals with them. Maybe they've built deals for us personally, all of them, and or we funded their deals. And so we got a long-term trusting relationship. So we know the borrower, and our money, and the project is in good hands.
Okay. All right. Well, I don't think that's bad especially for a first timer, because you're gonna. I know my first deal, I got spent with my contractor, and I ended up losing like 25 grand because of the contractor.
Yep.
So I would just assume that, hey, your guys they're just as invested as you guys are invested. So there shouldn't be. I know there's always things that come up, but there shouldn't be anything that's gonna
Yep.
hurt the deal per se that comes up.
And we're not stepping on it. There's no kickback to us. We just have a good working relationship, and that's who we trust and respect in the market for the different segments of building. New construction goes to the PVDC and grit, and the other guys spend most of their time doing rehab work.
Gotcha. Somebody just asked, is that the first deal or the first deal with just iFund Philly?
That's if you're a brand new investor.
You still there? Can you guys hear me at least, or you can't hear him? Okay, I thought so. Uh-oh. All right, you guys can hear me, so just hold on. He's gonna jump out and jump back in, and hopefully we get this thing. You did. So let me see. Let me bring you back in. It kicked you out as soon as it was getting good too. Can you hear me? Wait, you can hear me. Can everybody hear me? Somebody shoot me a message. Let me know you still can hear me. All right, perfect. All right, he's coming back in. He should be coming back in. Hold on, let me. Gotcha. All right, there we go. Stateless cigars, I hear that. Definitely the contractors is the hardest part. So maybe connecting with these guys, you could bridge that gap using their money and their hard money lender. Say it's low, and hopefully we get them back in here. But nah, I think that's key. Especially if you could find the contractors, like that's literally the hardest part. I know for me, my last two projects, I would say my last 2.5, they went pretty good. I've been able to find a few good trades and one general contractor to keep everything going.
There we go.
There we go. Nah, the people was like, we couldn't hear you, and they was like, it just started getting good as soon as you start giving them all the details.
My bad, man. I'm not, at the end of the day, man, I'm not tech savvy. So,
Nah, it's not you. The internet goes crazy when we least need it to go crazy, man.
Yeah, I hear you.
It's all right. So what kind of FICO score do people need in order to qualify for your loans?
So we don't have a minimum FICO score. I will tell you, if we see something below 550, we're going to ask some questions, right? Help us understand how you got to 550. If there's a reasonable, justifiable, response, like shit happens and, you had a hard time and you went through some tough times, that's fine. We're going to work through that. So we don't have a minimum. 550 is kind of that cutoff where we start going, all right, what's cooking here? And it becomes a little bit more painful to get the deal done.
So if I come to you, so what I do for my deals, I try to make it easy for the lender to see everything. So like, I'll send them my current credit score from my TransUnion. I keep an account with TransUnion.
Yep.
So I'll send you that so you can have it. And then what I'll do is, do you guys ask for tax returns?
No.
Okay, no tax returns needed.
No tax returns needed. We look at bank statements. We look at three months of bank statements.
So all right, so good question. So some investors are raising the funds for the down payment.
Yep.
So if I have a business account, but I'm putting just say 30 grand in there, it's all traceable through checks. It's not cash. But does that matter?
No.
Okay.
You can raise all the equity you want.
You just want to know I can close when I need to.
Correct. Yeah, well, they want to make sure you can close. They want to make sure that that you can pay your interest payment. And we can package interest payments into the loan for reserves if you want. We can do it without reserves. We can, if you have other property, we cross collateralize property to bring less money to the table. I mean, we do a lot of creative kind of design on the loans because every deal's unique.
Gotcha. So other than that, so I'm literally just giving you my credit. I'm going to give you the comps for the deal. You're going to want to see how many comparable properties to use for the ARV.
So we are going to run. We will get an appraisal.
How much is the appraisal?
Their market rate for residential 1 to 4 units, it's like $450.
Okay.
Yes, we get an appraisal. So the way our process works, if you wanted a term sheet for a deal, we would need the property address, the purchase price, the agreement of sale or the HUD if you already owned it, the estimated construction budget, the estimated ARV, an estimated FICO score. So if you have a TransUnion, great. If not, we're going to pull your credit. We pull it. We do a hard pull once you sign the term sheet. We kind of go through everything. We'll do a hard pull, but we do an estimate to kind of get you baseline pricing. And then, so that's kind of all you need up front. We'll give you a term sheet. We discuss the term sheet. It makes sense. You sign the term sheet. Then we would need a completed loan app, the bank statements, and your entity information. Okay. So that's your EIN, your operating agreement, and your articles of formation.
That sounds simple enough.
Yeah, it's all online. You can go to iFund, you hit good at quote. You set up your borrower portal, you drop it in. It's a repository. So you drag and drop right off your computer.
So a question that a lot of people ask, getting a traditional mortgage, I get a pre-approval up front. But if I don't have all the funds to close, I'm trying to use your funds. Are you able to give me anything so I can submit a successful offer?
Yeah, we've been successful doing either, some realtors accept term sheets and others want a pre-approval letter. We do both.
So in order to get the pre-approval, but say I don't know what I'm looking to buy yet. I just know, hey, I got 40 grand in my bank account. I could come to you and tentatively just let you run my credit and we can speculate a little bit and you can possibly give me a pre-approval?
Yes, I wouldn't give you a pre-approval. I wouldn't run your credit. I would just say, all right, you got 40 grand in liquidity. Let's talk about the deal you want to buy. All right, I want to buy a single family in West Philly. Right, let's go through the economics of what you're looking for. And yeah, we can give you a pre-approval letter for you to have that.
Nice. Okay. Making it sound too easy.
We're pretty quick, man. I mean, look, at the end of the day, another suggestion for borrowers is get your house in order, right? Like create yourself a folder on your computer with everything you're going to need, which is basic stuff, bank statements, your driver's license, your entity information, which you should have in a file, in a computer file. And then, the rest of the stuff is basic, man. It's going to be an appraisal. It's going to be title. It's going to be insurance. Those are all necessary evils that you got to state, that we'll walk through and do for you.
Okay. One of my tenants keep calling me. Can you hear me? Can you hear me?
Yes, sir. Can you hear me?
No, you're good. It was on my end.
Cool.
I'm back. I'm here. I'm here. Don't go nowhere. Can you hear me? Can you hear me? Ryan. All right, cool. So we got that. We got the folder. We got all the documents. So what would you say for somebody? Let's just say ideally somebody has, I don't know, $100,000 in the bank account.
Yep.
If somebody has 100,
Yeah, you broke up a little bit.
can you
You
hear me
broke
now?
up. Yeah, I got you now. I heard it was 100K in a bank account. What was before that?
Can you hear me?
Yeah, I got you.
All right. I was saying, killing me. I'm sorry. Let me. And if somebody,
I can't hear you, my man. Yo, yo.
can you hear me?
I got you now.
I'm back. Can you hear me? Can you hear me?
I got you. I got you.
All right. I hope I don't get kicked back out. But I was saying, if somebody has $100,000 in the bank account, right? So would you
Yep.
recommend that? Would you recommend that person? Would you recommend that person use all that cash to start, or would they use that? Or no?
No. No, I wouldn't use all 100K, man. I would always keep some reserves. You know, I would look at maybe taking 30, 40, max 50 of that and levering it up with either hard money, bank money. So if you got a high W-2, right? If you got a good W-2, a great credit score, and you got that kind of cash in the bank, you don't mind the slow pace on deal one, then banks are going to be your best option. If you have that kind of cash in the bank and you want to move a little bit faster, private money is going to be, a great solution for you. If you don't have anywhere near that kind of cash in the bank, 30 to 50 grand, then private or hard money would be a great solution for you. But I would never use all my cash. I would lever that cash up at least one time so you can do 2 or 3 deals. Or if you do fuck up on the first one, for lack of better words, you
Right.
got reserves.
No. So I like that analogy. So some people are like, man, I don't like taking loans. I don't like owing people money. But I always tell people like, hey, it'll take you, just say it takes you 12 months to save this 20 grand. But if I could go to the bank and get 20 grand right now when at low interest rate and merge that money with your money, what difference does it make? Like you said, I don't have to make 75 grand on each deal, but I might make 35 here, 35 here. And now I'm moving at a good rate.
All day.
Okay.
And I'm with you. I'm pretty debt free. I don't like to borrow a lot of money either. I hear people out there, but I will tell you, when I was starting out, had private money existed, and it did in 2008. I just wasn't smart enough to go find it, and it wasn't as widely prevalent as it was today. I would have absolutely taken little shingles, a couple bucks I had, and levered it up to do my first deal versus having 100% of my eggs in all one basket.
Right. And now, at the end of the day, I also feel like it kind of saves you. Just say something goes wrong in your personal life, all your money's stuck in the house. Versus if you leverage it, now you still have funds for your emergency. Let alone something goes wrong during the rehab. I know the rehab I'm doing now, things went wrong. Luckily, I still had some liquid to cover the overruns because you guys don't want to hear, oh, I need more money in the middle of the deal.
Correct. Correct. And by the way, if that does happen, the way we approach it is we have a conversation about it, right? We'll come out on site, we look at the project, we'll work with you. At the end of the day, I never understand wwhy lenders want to hold back draws from individuals, because that's not doing anything but delaying the project and stalling everybody. GC gets upset, walks off the table, walks away. The borrower's scrambling to find cash. And at the end of the day, it's not advancing the project to either get it off our balance sheet. So it doesn't help anybody. So the way we approach that is, we work collectively as a team and we continue to fund draws. If you're asking for 25 and you don't need 25, I'm not giving you 25. I'm going to give you 10 or 15 to keep the project going.
Gotcha. Okay. So how does somebody go from, all right, I'm using my own money, just say, oh, I don't think we talked about it in regards to your funding. So are you guys giving the percentage of the down payment? Just say, I guess it's 20%. Is it 20% of the purchase price or the 20% of purchase and rehab together?
It's 20% of the purchase, and it fluctuates. We'll go all the way up to 10 when you're highly experienced. For the newbie, it's going to be somewhere in between that 15 and 20%.
Okay, but you said you might even go down to 10%.
Correct.
So if I'm doing of the purchase price, so just say if I'm buying it for 40 and I'm rehabbing it for 90, I need that 20% of the 40.
Correct.
I'm telling you,
we give you 100% of the construction budget and typically 80% of the purchase price.
Okay, but no draws up front for the construction.
No, you'll fund your first draw.
Okay. So roughly, I guess, what's that about? Say about 10, 15 for the.
Yeah, I mean, it's all deal specific, and it really depends on that renovation ratio, how much you're buying and how much work you're putting in. That's how the math works. So, I mean, the best way to really articulate that, it's kind of hard to do here. You kind of got to see it live, is to, send a deal or give me a call, and, we'll walk through the numbers. I'll show you how the math works, and we can talk about how to move the levers and where we can move it. Here's where we can potentially trim on the construction budget, maybe not. Maybe we can use this to drive down the purchase price. We work with guys and we can show you. So it's easier just to bring a project. I'm not trying to duck the question.
No.
Broad strokes, you're hitting all the main points, but it really is deal specific. I mean, the deal might be really, really juicy, and then we may get way better on the leverage because we like the location, transit oriented, great neighborhood, et cetera, et cetera. So, it's hard to put us in that we're just 20% all the time, because we're not.
I got you. So what areas right now would you say are you guys writing a lot of loans for?
Yeah, we do a lot of West Philly. We're doing a lot of Brewery Town. We're helping some guys land bank in Strawberry Mansion. We're doing a lot of Old Kensington. All the hot neighborhoods in Philly, man. Everything in and around those tertiary markets. Southeast, Southwest, Northeast, Northwest.
Okay.
So Grays Point, Brewery Town, Strawberry Mansion, Kensington, Fishtown, Hesley High, Port Richmond, et cetera, et cetera.
Gotcha. And what would you say, would be, what separates your really good investors versus the investors you see that are just barely getting by, like COVID just came and wiped them out?
Two things. The really good investors focus on what's essential to their business, and what's essential to their business is finding good deals. Sourcing good deals is number one. And executing on the deal. So, doing pre-call planning with their GC and architect if they're involved, right? Managing their project, not getting ahead of themselves, right? So understanding your limitations, that you're one person, building your team, executing on your project, one at a time or two at a time as you grow and scale your business. Those are the ones that I see do things really well. And then leverage. The guys that don't take all of the money out of the project at the end of the day. So if they have a vacancy for a month or 2 months, they're not scrambling, paying rent, or have a new loan modification, which then hurt their credit, which hurts their ability to go get money from us or bank, which puts them in the hard money, which is going to be very expensive. Those are the two things that I see. Conservative leverage on the exit, 65%, not 85% or 80. In between that 65 and 70%, even if they're leaving a couple bucks, $5 to $10 grand in the deal. And that's the difference, right? So if you leave 5 or 10 into the deal and you got good leverage and something changes like COVID, you're not scrambling. You actually own enough of that project for it to make sense. So those would be my two suggestions. Conservative leverage and execution, and focusing on finding deals.
like that. I like that. Yeah, one of the other gentlemen that I interviewed, that's his big thing. He said, I like to buy enough properties and he's buying them cheap. So he says he'll spend a year of not rehabbing just to buy. So now the next year he can dictate his income for the next 2 years based off of what he bought this 1 year.
Absolutely. And don't get scared to knock on doors, man. I mean, the guys that I see really hitting it, like, Vince Viney is one of our big customers. I'm not scared to say he's all over Instagram. He's one of the largest residential builders. I mean, Vince has got an incredible story. He's a Kensington boy without a pot to piss in. He walked the streets and found deals. I mean, it's that kind of business. It's a gritty street business. You got to get out there. You got to shake hands. You got to build relationships. And you may not get the neighborhood folk to sell to you day one, but if you keep coming around and they keep seeing you and you add value to the community, you will get deals.
Okay. I like that. And I mean, a lot of people, they're nervous or they guess they're shy that they don't want to do the knock on doors. But I know a lot of people that, that was the thing before everything with the deal machine and all the other stuff.
Yeah, I mean, tech still does it, right? But at the end of the day, people like shaking people's hands still. Right? Maybe not now as it's COVID, but, I like to get out.
Give him a fist pump.
Yeah, you know what I mean? Throw him up.
Now, so what do you think, I guess, definitely helps in regards to being able to, be that successful investor? Buy and hold or fix and flip?
So I think that's going to predicate on what your goals are, right? So if your goals are to build wealth, buy and hold. If your goals are to make some income until you can get to that buy and hold, then fix and flip.
Okay. I like that.
I'm a buy and hold guy because I'm later in my career. I've been investing for 10 years. Early on, we sold all those 10 houses I told you about, right? We sold Frankfurt and Frankfurt stacks. Kicking myself now. Love to own those projects, right? But we sold them because we didn't have any money. And then as we had money, we became bankable. We became private money eligible. And then we started to hold assets.
Gotcha. And then in regards to, I guess, the whole buy and hold play, are you guys helping people refinance out as well if they come to you for the initial funding, or how's it working out?
Yes. So we had a product pre-COVID. We had a bunch of products pre-COVID. We lost them. Because Wall Street shut down. We just got word today we should have one back within the next 2 weeks. That being said, we have really good local bank relationships, and so we underwrite our exits to 3 different local banks. And so, yes, if you come with us, we can help you. We don't actually do the loan, but they accept our underwriting, and so we can get you end financing.
Okay. And for those people, I guess, who do have a job or don't have a job, I guess, what would you tell those people? Because I know some people are like, I can't wait to quit. So you recommend people like quit their job, or like would you say keep that W-2 because it makes you more bankable?
I would say keep that W-2. I would tell you at the end of the day, real estate is getting harder and harder and harder and harder to make money in. And if you got a great W-2, keep that, build your side hustle. I built the side hustle for 10 years with a W-2 before I left my job. And so, as much as everybody wants to just skirt out of the W-2 and become a real estate developer, a real estate investor, I think it's prudent to take your time, make sure you love it, make sure this is what you want to do, and it's not a get rich quick. This is a build wealth, and a lot of times you're not going to see it until later on. And if you have children, you're doing a lot of this to pass on to your children. But if you do it long enough, you stay consistent, like anything else in life, you'll be successful at it, and you'll wake up one day with a nice reserve and a nice income stream that will give you the flexibility that you're looking for. But consistency in life, whether you're being a consistent father, consistent husband, or consistent in real estate, I mean, that consistency is what's going to help you get to the next level.
I like that. Can you recommend any good books? Like we always ask our guests, like what are some good books that they really enjoy reading that help them, during their journey of just being a business owner or even being in real estate?
Yeah, I got a bunch of books, man. But this is a good one. I'm just reading. It's Essentialism. It just talks about what's essential in life and weeding out a lot of the noise. So that's a great book. I got a whole bunch. I don't know off the top of my head, Ant. You caught me off guard because I read so many, but I can get back to the thread and shoot you some. You can get out to your
To the good people.
out to your peeps for sure.
Okay. So
I don't really read real estate books, man. At the end of the day, I read books about the soul and culture and consistency. And I would also tell you, man, don't be scared to fail. Fail fast, dude. I did 5 startups before we started IFP, and all of them failed. Some of them made money, some of them didn't make money, some of them lost. Some just be passionate about what you do. Get up and get excited about life, whatever that is. Playing the piano, your W-2, your children, real estate. And if you're excited, you bring that passion and energy to life, good things will happen. And surround yourself with great people smarter than you. At the end of the day, I am by far the dumbest guy on IFP. Brian, Justin, and Chris are incredibly talented and blow me away. But I was smart enough to know and put them in positions where they're leveraging their strengths. And if you leverage your strengths and surround other folks on your team with the strengths that you don't have, you will be successful.
Nice. And I love that you were open and let people know, like, before this, I've tried 5 other things and they did not work out the way I wanted them to. And can you just talk about that journey of the 5 things and like how'd you stay the course of still pursuing or trying to figure out what to pursue?
So I've always had a passion for real estate. I did healthcare startups for a bunch of years. I did, 4 healthcare startups and then an oil and gas startup. And at the end of the day, one of my other passions in life is, and what I do for IFP is build a high performance sales team. That's what I ended up doing for my career. So motivating guys, helping guys get the best out of themselves, helping understand, find their purpose in life, which often tends to be personal stuff, not necessarily business stuff. But once they get that, that personal stuff right, the business takes off. But those journeys, I didn't stay the course, man. At one point when I failed one of my 4th medical distributorship,
Just when we lost you, just when you was about to give it to us. I know he froze right when it was getting real good. As soon as he was about to tell us, as soon as he got to the failure part. But I think that's key. Like for me, I'll tell you guys, my first flip, I didn't make any money. I just made all my money back. And even for me doing the real estate journey of being an agent, listen, I failed my real estate test 10 times. 10 times. But I know people who passed the first time and they didn't make it through the first year of real estate. For me, this is my 7th year in the business, and we going strong. Got a team, good neighbor team, and we making it happen. So I definitely look forward to helping all the people out, whether they want to buy their first home, whether they want to sell a house and upgrade, and then I help even people looking now to try to be an investor and reach those goals. So I think it's definitely important, and like he said, to keep networking and building with people so that you can put your team into place together. Because I know for sure having a good team around is the stuff that definitely will help you keep moving and reach your goals a lot faster. I mean, the stuff you don't know that you don't know is very, very key. So, if you can figure it out and network with people to expand what you don't know, look, you'd be surprised what you could reach. And I know just for me in my last 2 years, for me to be able to flip 4 houses last year in 1 year, that definitely came from partnerships, networking, and, just constantly building my team. So, with that said, good people, we definitely appreciate you guys. I mean, we got a couple minutes, so if you guys have any questions, definitely shoot them through. I love to answer them. And we're definitely going to have to do another event and get Ryan speaking so that we don't got to worry about the internet. So don't worry, we'll definitely do a follow-up event with him. But do you guys have any more questions? Did I miss any? The book he asked for that he had was Essentialism. He didn't give the author, but the book was called Essentialism. Somebody asked, how does the offer get made? So in regards to making the offer, what happens is, you'll basically go find the deal. You'll call your lender and say, hey, this is tentatively the purchase price. This is roughly what the estimate is. So in order for you to submit the offer, you're going to have to show some type of proof of funds. So based off of your profile that you already gave the lender and based off the deal, that lender should be able to give you some type of term sheet or some type of pre-approval. So if he gives you that pre-approval, you'll then submit your offer. Once it's accepted, then you'll go turn around and give the lender the agreement to sell. And then you'll basically go through what they call the underwriting process. Once you go through the underwriting process, there's the appraisal. And while the appraisal is getting done to solidify the after repair value, once you rehab it, you're going to want to go through and, cross all your T's, dot all your I's with your contractor and make sure you have a strong construction schedule. With that schedule, you're basically going to lay out line by line what you need done in every room and every part of the house, inside and out, and you're going to put a budget behind it. So just say, for instance, demo, give yourself a budget, $3,000, $5,000, whatever it is. You're going to do the roof. Once you get done the roof and demo, then you're going to go ahead and, start the framing. Once you do the framing, you're going to do the windows. That's another budget item for $5,000, $3,000, whatever it is. But it's all going to line up and add to the total amount of the rehab from A all the way to Z. And don't forget, I always say, give yourself a buffer. If the rehab is projected to be $60,000, give yourself room. You want to try to make it $70,000, $75,000, just to give yourself room. If you don't use all the money, great. That's more money you leave into the deal for profit. If you use it, cool, you still got room. But what you don't want to do is be stuck in the deal and things go wrong in the rehab and it's like, oh my goodness, how do I pay for this? I didn't expect that. Again, like the rehab I just finished in Cobbs Creek. I didn't expect the budget to blow up the way it did. I did about $8,000 more in concrete work, just in the basement alone. And then I had some exterior work in the yard that cost me another $3,000. So that's $11,000 just right there that I did not expect that I had to account for. So I didn't have it in the rehab budget, but luckily I had it in my pocket, not my pocket, but I had it in basically business credit with 0% interest that I was able to leverage to pay for the overhead, and then I'll pay it back when the house sells to bring me back down to a zero balance. But again, just making sure you got a good team and structuring everything in a way that it gives you room to operate and make work. It's pretty much you'll be able to pay everybody back and live to do another deal. So again, if you guys have any other questions, feel free, reach out to me, let me know. I'm looking forward to doing these. Next week, we're going to be with the Credit Repair King, Herman. Herman's coming through next week. So for those guys that are looking to get business credit or just fix your personal credit, make sure you guys tune in. Bella Sloan, Herman, the credit repair expert. He's going to be here next week. I'll make sure I drop that flyer tomorrow. Again, I appreciate your patience for the technical difficulties we had tonight. And don't forget, hit the link in my bio. Real Estate 100, the Teen and Millennial Investment Blueprint. For those of you who are just looking for a little bit of guidance, a little bit of motivation and instruction on how to get started, how to get that first property under your belt. Again, the link is in my bio, and we will make it happen. But again, I appreciate you guys, and we'll be getting together next week, same time, 8 o'clock. Y'all have a good one. Stay blessed. Appreciate you.